Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. Here's your daily technical analysis of stock index futures. I'll start with the UK FTSE futures. A reactionary and interesting bullish above the stomach pattern on Friday, if only just. Prices were immediately interesting as they opened well over the long moving average, currently 72.90, as well as the light Fibonacci congestion at 71.91. It was as I suspected on Friday morning that whilst the market had done much, prices still did not approach the pair of significant 50% Fibonacci levels below at 71.85 and 71.80 for the July 2021 to February 2022 move, and the very recent March to April move respectively. This failure to approach was much like the failure 2 weeks ago to close below these same two 50% Fibonacci levels despite 3 attempts. Not what you'd like to see if you were a bear. So prices tried higher and we found a wealth of congested moving averages consisting of the flatlining medium moving average, currently 74.16, the short medium moving average, currently 73.91, and even the falling short moving average, currently 73.93 above. The market pierced them all by quite some way, but could not sustain the move up on Friday and ended up closing just under the short medium moving average and short medium moving averages actually. Yeah, just under both. So far today, another higher opening, well above all the moving averages. Prices are now gingerly approaching the overhead upper trend line, currently at 74.96 of the possible descending expanding wedge pattern. It will be this and the high of last week at 75.20 that will be the immediate resistances the market needs to challenge. German DAX futures. A second consecutive indecisive pattern on Friday. This time it was a higher indecisive spinning top to accompany the previous session's lower indecisive doji cross. Interestingly, the market had a long tongue on top that pierced up and through the mess of resistances between 14.079 to 13.804, including the February 2020 low at 13.821 and the 50% Fibonacci line of the October 2020 to November 2021 move at 13.804. Additionally, prices pierced the neckline of the December 2021 to February 2022 head and shoulders top, currently at 14.062. And the upper trend line, currently 14.118, of the late March to date descending expanding wedge pattern, which parallels the upper time, currently at 14.277, of the January to late March bearish shift pitchfork. Now, despite all this effort, we still ended up almost where we started. So far today, another much higher open, beyond the congestion zone between 14.079 to 13.804 and the neckline, and prices even managed to punch up and out of the upper trend line of the late March to date descending expanding wedge pattern, but once again they have not been able to sustain the move high, and we're back below where we started, back within the 14.079 13.804 congestion zone, and looking like a third consecutive, if higher, possible indecisive pattern in a row. US E-mini S&P futures. A very significant day on Friday. On its own, it was a long-legged, indecisive doji cross at the low of the market, the lowest since March 2021. However, it was also an outside day, as well as a weekly key reversal down. All this excessive behavior was caused by one thing, something that I had cautioned might happen. It was the time crossover on Thursday of the lower time, currently at 39.11, of the bearish shift pitchfork, and the middle time, currently 38.95, of the bearish Andrews pitchfork, both for the same move, the January to March move. As I said, I had previously highlighted this important time period with a red circle, and also drawn another red circle for the next crossover, assuming that both pitchforks will be operational. And that's of the upper time of the bearish Andrews, currently 42.69, and the middle time of the bearish shift pitchfork, currently at 42.09, in a few days' time, actually on the 7th of June. Hence, I renew my warning on what to look for. See, when we see times crossover such as we saw last Thursday, you should look out for one or more of the following to occur on the day or soon thereafter. Volatility, a change in trend, or a reinforcement of a trend. Hence my caution. This second crossover is also circled in red. this will only become redundant if one or both of the pitchforks are retired. Another reason as to why technical analysis is useful here is more immediate. Though we had a lesser outside day on Friday, the whole of last week made a weekly key reversal down, if at the low of the recent market. So far today, a reactionary move back up, with the market opening on top of the congestion at 39.11 and immediately moving higher away from the time crossover and the congestion at 39.02 and 39.11, and approaching, kissing but not as yet testing the next obstacle above, the February 2021 high at 39.59. Thank you for listening. This short version broadcast gives you essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyrights Tofpik and ADM Investor Services International Limited. And here comes the final bit.